Today I made a little bit over $71,000 trading the NASDAQ, and today I'll be going over it with you guys. Let's go. So, coming into the session, we had a specific bias set in place through utilizing higher time frame analysis, through utilizing overnight price, through utilizing our opening range move. We were able to get a gauge of price and more so what it wanted to do. Through overnight price, right, or first things first, through looking at higher time frame narrative, off the bat, what we were able to see was a very bearish sequence through Tuesday's New York session. And all we were seeing price do overnight was kind of consolidate. We did come back up, tap a 4-hour gap inside of a 4-hour PPR, right? A bullish fair value gap and a bearish gap right here. Or excuse me, you're seeing a bullish gap here go invert. And you're also seeing a bearish gap right here as well. So we kind of see that there in place. And then we end up seeing price come back up. We see price tap that 4-hour. So at this point in time, coming into the open, I wasn't extremely bearish. I was obviously leaning bearish because we had put in lower highs. We had seen the 4-hour, right, the hourly as well, through Tuesday session be very bearish. And so if overnight price wasn't going to seek a move past this 4-hour BPR, I felt like draw was most likely going to be lower. Draws such as in PDL, such as in these or draw levels right here, being this 4-hour gap fill. This hourly gap fill and 4-hour gap fill right here. And this also this daily external low. So that was something I was kind of eyeing at. And the reason I was super optimistic about price driving so much was because of how consistent price was yesterday. So more so what I was doing here was kind of building off what yesterday did. And I was looking for price to kind of seek extension or seek that same type of volatility as it did yesterday. So that's more so what we were looking at here. Again, utilizing overnight price, it was kind of consolidation prone. We then ended up seeing the tail end of London trade at a state where it started seeing a bit lower. We then see New York open off the opening range move, initially be choppy, but then you see price that essentially displace and get us to move towards the downside. This 5-minute candle here specifically at 9:55 a.m. Eastern Standard Time is what really confirmed downside interest for me, because not only do you see the opening range move kind of seek, the move, and then you see the reaction off this candle, but you also see price come down here, and you see price take out that PDL level, like we talked about, right? That PDL level that we had, you see price come down, you see price take it, and then you see price ultimately still look for potential and continuation lower. Now, off the open, I was a little bit weary because price was not trading the best, and if you guys looked at the past couple of reviews, through price action, you've seen that New York opens have been a lot more decisive. We would usually see like an opening range move, open, boom, and then seek kind of like mass continuation. For this here today specifically, we saw PDL get taken. We did see a retrace, but the good thing about this sequence right here was we never ended up seeing price look for reversal, right? We did see a couple pullback candles off the 5-minute time frame, but you never saw price tell you, okay, now I want to seek reversal off the PDL level. What we do end up seeing ES do a bit more is we do see end up ES hold range a little bit better, because ES, I wouldn't say it was the leading asset, but it was the lagging asset behind NQ. That's what ES was for today. And so I felt like what initially caused the trade that we ended up taking today to be a little bit longer than it was because of ES, and ES not wanting to give up that low and seek lower, but we eventually did. In terms of our trade here today specifically, it was a simple, initially it was going to be a 5-minute gap tap, which was this 5-minute gap right here. We wanted to see price come up, tap, reject, very similar to kind of the conviction that we had yesterday, where we wanted to see a 5-minute bearish gap get tapped, and then we wanted to see a 1-minute gap go invert. Same thesis here. We see this 5-minute gap get tapped into this time for today, but we also see it get inverted. However, we do end up seeing price come back down, displacing through that 1-minute inversion, still putting in lower highs through price, right? You're still seeing these swing points still be lower highs in price, right? So lower high, lower high, lower high. That still tells you that there's bearish price here. And being that price has been trading decently through yesterday, the past couple of days, I wasn't really too concerned. Here initially, I was concerned about the initial chop fest and price confirming not a great entry through this trade, but the confirmation that we did end up getting through this trade, which was the candle closure at 10:34 a.m. Eastern Standard Time. Once we ended up closing that candle and we saw how clear displaced price was coming back down, I felt this trade was, good to go. Price was still very up and down today, but in terms of the confirmation sequence at the time of point of entry in this trade, very good. We see price come down, we see price not hesitate like we did here, and we see price immediately come down and go invert off the 1-minute gap. Again, confirmation being at 10:34 a.m. Eastern Standard Time. What we then end up doing is we end up placing our stop loss off this trade through this swing high. Lanto, your entry is 175, your stop's 305. That's like a 120 point stop. Yes. But then you also look at the take profit in mind off this trade, and you see where we hit take profit one, which was 24,994. And if you do the math, 175 being entry and our TPs being 994, that means our take profit's about 180 points, right? 170 points. So what I want you guys to do, if you guys don't do already, which has really helped me, and I talked about this while we were in this trade, always make sure you base your trades off structure, not off points, right? That's the most important thing. And I said this on live, but someone asked me in chat, like, or someone was trolling about the stop size on the trade, and I kind of thought to myself, I'm like, there's people who genuinely out there really just trade based off points. And so, for example, like today, if you had your stop based swimming at wick high just because you felt like the stop placement off the swing high was too big in points, we end up seeing price come up here. We see price wick off this high. You would have gotten stopped out for a -1R versus seeing this trade come all the way back down here and hitting your TP for about a 1.3R, right? That's the importance. Whenever you place a stop loss on a trade, it should always be off the chart, and it should always be off an area of interest where you feel price is at a good invalidation point. So I felt if this woman at gap one invert, if we break the structure that we had developed here, and then we see price come up and trade past the swing point, that's a good invalidation point. I don't believe in this 1 minute wick high because this doesn't necessarily mean that we're totally bullish. I feel like the break of structure or the break of these lower highs here off the swing point more so means that because you're seeing more displace requiring into this high, and you're also seeing these lower highs get taken out. So that's more so it. We do end up seeing a weird candle on this trade a little bit after entry. That was a little odd. I believe that was maybe a Trump candle. Not sure. We see price come up. You know, we weren't panicking. We were letting the trade pan out. We eventually come back down, chopped for a bit, but then ultimately came back down. And our break-even stop loss or break-even was low of day off this trade. Once this low of day got taken out, we would move our stops break-even, which is exactly what we did. We then end up seeing price consolidate for a bit, eventually coming back down and beginning to take profit. And from there, we ended up more so looking to trail off our final position. Here are the executions. We take the entry confirmation. We then see a bit of consolidation. We come back down. Our take profit one is smashed, which is this 4-hour gap fill at 24.99 or 24.994. And chat, sneak preview. Don't leak, but there's a video coming out very soon, a high quality video talking about this specifically in terms of why I place my take profits where I do, and more so looking to utilize higher time frame towards my benefit. Stay tuned. So we end up seeing profit get taken. We then end up trailing our stops. Right, once we end up seeing price start to displace lower past TP1, we trail our stops to this previous area of interest, which happens to be, I believe, an hourly gap fill. So we end up trailing our stops there. We end up seeing price eventually come back up, trailing the rest of our position on this trade, realizing our day for about $625 per account on Lucid, which is about a 1.2, 1.3R, being that we risk $500 per trade on these type of days, going 1R risk. And essentially what I did on my other accounts, just essentially copy and pasted these trades just with higher leverage. That's what I do all the time. And so yeah, cumulatively together, I'm up the amount I am. And yeah, great day overall. That's the review simplified. If you guys enjoyed it, make sure to give it a thumbs up. If you've watched towards the end of this video, comment continue, and I'll know you guys want these recaps furthermore. So yeah, see you guys on the next one.